Ladies and gentlemen, good day, and welcome to the Netweb Technologies Q2 FY2026 earnings conference call hosted by IIFL Capital Service Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note, this conference is being recorded. I now hand the conference over to Ms. Renu Pugalia. Thank you, and over to you, ma'am.
Thank you, Mark. A very good afternoon, everyone. On behalf of IIFL Capital, I thank the management of Netweb for giving us the opportunity to host their 2Q FY2026 earnings call. From the management team, today we have with us Mr. Sanjay Lodha, Chairman and Managing Director, Mr. Naveen Lodha, Whole-Time Director, Mr. Ankit Kumar Singhal, Chief Financial Officer, Mr. Hriday Vikram, Chief Sales and Marketing Officer, and Mr. Sanjeev Sajjeti, UDIS Advisors LLP, IR Advisors to Netweb Technologie. I now hand the call to Mr. Sanjay Lodha for his opening comments. Thereafter, we can start the session for Q&A. Thank you, and over to you, sir.
Yeah. So, thank you, Renu. Good afternoon and warm welcome to all of you to Netweb Technologies Q2 Financial Year 26 earnings call. We are pleased to share the quarter has been an exceptional for the company. We secured two large strategic orders worth approximately 21,840 million to be executed by Financial Year 27, reaffirming our position as India's largest OEM in high-end computing solution space. Operating income grew by over 50% year-on-year in H126, while operating EBITDA increased by over 60%, delivering a healthy margin of 14.9%. PAT for the period stood at 619.1 million, up by 49.5% year-on-year with 10.2% margin, reflecting strong demand, disciplined execution, and scalability of our business model. We have once again outperformed our stated growth guidance of 35 to 40% CAGR, reaffirming our commitment to constantly deliver our promises. The strategic orders won are of national significance, aimed at strengthening India's AI compute infrastructure and advancing the vision of sovereign AI journey of the nation. By delivering world-class AI infrastructure, designed, engineered, and manufactured in India, we are helping build nation's sovereign compute capabilities, accelerating its emergence as a global AI powerhouse, enabling citizen-centric services, and moving closer to the vision of making India the AI factory of the world. Beyond these strategic orders, our growth in the AI segment has continued to be very strong. The segment's revenue contribution rose from 14.7% in first half of financial year 25 to 25.4% in first half of financial year 26, reflecting an impressive growth of 160%. The performance underscores our steadfast commitment to in-house design and manufacturing of next-generation systems fully compliant with Make in India vision and contribution to India's emergence as global hub for high-end manufacturing. Netweb's continued focus on its three growth pillars, that is high-performance computing, private cloud, AI system, is enabling us to capitalize on strong momentum across these segments. Supported by robust industry tailwinds, these core business positions us as a technology leader in the SCS space. This strength is reflected in our robust organic order book of 4,939 million as on September 30th, 2025, together with recently secured large strategic orders of over 21,000 million and strong business pipeline. We are very well positioned for strong, sustained growth over the next few years. I now request Ankit to take you through the financials.
Thank you, Mr. Lodha. Good afternoon to all the participants. I would like to draw your attention to the safe harbor statement in the earnings call presentation. I request each one of you to go through the presentation before the Q&A starts so that you are aware of the same. Ladies and gentlemen, thank you for joining our earnings call. Before we open the floor for Q&A, I will provide a brief overview of the financial performance for the quarter and the year gone by. I trust that by now you have had the opportunity to review our earnings presentation and press release. While our CMD has already discussed the macro outlook, I will elaborate on the financial performance, providing a more detailed analysis. Our operating income for Q2 FY2026 increased by 21% YOY, reaching rupees 3,037 million. Our operating EBITDA for Q2 FY2026 increased by 25% YOY, reaching rupees 454.6 million, while the operating EBITDA margin for Q2 FY2026 was 15%. Profit after tax PAT for Q2 FY2026 grew by 20.1% YOY, reaching rupees 314 million, while the PAT margin stood at 10.3%. Our operating income for H1 FY2026 increased by 51.1% YOY, reaching rupees 6,049 million. Our operating EBITDA for H1 FY2026 increased by 60.6% YOY, reaching rupees 903.2 million, while the operating EBITDA margin for H1 FY2026 was 14.9%, improving from 14.1% in H1 FY25. Profit after tax PAT for H1 FY2026 grew by 49.5% YOY, reaching rupees 619 million, while PAT margin stood at 10.2%. Return on equity for the H1 FY2026 was 22.4%, while return on capital employed for the same period was 30.2%. Our cash conversion cycle as on September 2025 stood at 120 days, reflecting an increase of 9 days compared to the previous quarter. The primary reason for this increase was the reduction in the payable days from 84 days in June 25 to 70 days in September 25. Receivable days improved from 124 days in June 25 to 117 days in September 25. It is important to note that advances received from the customers for large strategic orders have not been adjusted with the debtors while calculating the receivable days. Inventory days remain unchanged at 72 days across both quarters. Our balance sheet strength is reflected by us being a zero net debt company. The company had net free cash of rupees 2,379.8 million as on September 25. For the large strategic order, no additional capital expenditure will be required. Short-term working capital needs, primarily LC based, have been already secured to ensure smooth execution. These orders are LC backed, guaranteeing timely payments and eliminating credit risk. We remain firmly aligned with our strategic roadmap and growth priorities. With strong momentum through the year, a robust order book and a healthy pipeline, we are well positioned to deliver consistent revenue and profitability in current fiscal.